At least once a day, I'm talking to a potential home buyer that is putting their home search on pause until interest rates go down. They were so concerned 3 years ago that prices were going up too fast and they were going to wait till prices dropped, and they're just going to continue riding the roller coaster until who knows what. So for those of you that are concerned about getting a high interest rate, 7 upwards of 8% right now, here are 3 strategies that you can use to try and lock in an interest rate much lower than that today, so you don't have to wait until interest rates drop, because who knows when that's going to be. Let's get into this video. And if you have no idea who I am Haydn Halsted, your real estate resource here in Spokane, Washington. I'm helping people buy and sell real estate on the daily and would love to help you do the same thing. Many of you are moving here from out of the area, finding Spokane to be a more affordable market, and I am specializing in helping you make that transition. So you can use the link down below in the description to schedule a call directly on my calendar at a time that's convenient for you, or call, text, email anytime. All that info is down below. So the first thing that you can do is find a seller financing opportunity. So seller financing is where you work with the seller instead of a bank to get a loan on the property. So on a traditional purchase, you're going to go to the bank and say, hey bank, I want to buy this $500,000 home. I have 20% down payment, so will you give me a loan for $400,000? They say yes, based off of your credit and your income, and they give you that money. So if you're able to find a property that is owned free and clear, meaning it has no mortgage on it, the seller owes no money on it, these are the easiest to do seller financing on, as they are much less complicated than trying to deal with a house that has a mortgage on it still. We'll get into that, but you'll find a property that is owned free and clear. So you have to work with your realtor. You're going to have to call around a lot, do some due diligence to find those properties that are free and clear, that are listed on the market, or maybe you're marketing to properties that are not listed on the MLS. You're sending letters to people that are not listed and trying to find out if they'd be open to selling to you. And then you're going to offer seller financing terms. You may have to educate the seller on what that is. If it was an investment property, the seller will probably understand what seller financing is. But if it's just a family that's been living in that house and they're not super savvy with real estate, they might have no idea what that is. And so you're trying to find the person that doesn't need the cash right now in order to do whatever they need to do in their life, and that they like having monthly income because you're going to give them a monthly income. And so I'm doing a deal right now where I have a seller that had some property. It was owned free and clear. It was like a 10-acre piece of land, and I see this more often on land or investment properties. But because it was owned free and clear, she wanted a higher dollar amount than maybe what the market would say, probably roughly 20% more than what the market would say. So she offered seller financing terms so that she could offer a much lower interest rate than what people would get today, but she would over the time period actually get more money than what she was expecting. So she was hoping to walk away with $195,000. That was the number that she needed. And so we are actually able to put a deal together where the buyer put it under contract for $170,000 at a 5% interest rate, which is 2.5% below today's market rate when I'm recording this video. But for a land deal, I mean, that could be anywhere from 3 to 4% below the market rate for a land deal right now. And so the buyer's getting a great deal. Their payment's going to be much lower than a bank. They had to put down, I think 30% is what they ended up putting down on that. And now what we do is we amortize that loan over a specified period of time. So like when you get a normal mortgage, you're going to amortize it over 30 years or 15 years. This is amortized over 30 years. But a lot of times on these seller finance deals, there's a thing called a balloon payment. And so after a certain period of time, you're going to make your payments for a certain period of time, but then all those payments, the rest of the payments are going to come due at the same time, and that's the balloon. So this property is on a 5-year balloon. At the end of the 5th year, the buyer is going to owe all the remaining money that was due over that 25 years remaining on the amortization scale, but they will be able to have enough time to build their house, refinance, and pay off the loan. So then the awesome thing is that even though we went under contract for $170, my seller wanted $195, Well, the interest at 5% over 5 years is right around $25,000. And so my seller gets to make an extra $25,000 on this land, making it a great deal for her because she gets the amount of money that she wanted, but the buyers get in more affordably than they would if they tried to purchase it with a bank or brought all the cash to purchase the property. Now they can keep some cash in their pocket to build the house. So this can happen on single family homes. You just have to do a lot of work to find a seller that is willing to work with you. But if you can come to good terms with them, where maybe it's a lower interest rate that you negotiate, a low down payment, a different pay schedule, all those things are completely flexible with seller financing. And so if your goal is to get a lower interest rate, then you could offer maybe a larger down payment with a lower interest rate or some variation of that. The next big opportunity out there is assuming somebody's loan. And so in the home purchasing world, just and at the more basic level, there are FHA loans and VA loans that can be assumed. And so what that means is that if somebody bought their home, let's say 3 years ago, with an FHA loan, it is written in the contract on that FHA loan that's another borrower that the bank approves can assume that loan and take it over. And so what the benefit is that you can take over the mortgage, the payments on a house that was purchased 3 years ago when interest rates were a lot less, and take over the interest rate that they have. This can also be done on some VA loans. It depends on the bank, but some VA loans will allow a non-veteran to assume the loan, but you need to work with that bank to find out if you are losing the seller's VA entitlement. Will they be able to go buy another a property with a VA loan themselves, or are you kind of screwing them over? So those are some things that you might have to work out, but don't get stuck in the details right now. Just go out there and find properties. And so my biggest recommendation here in the Spokane market is that people that bought in the second half of 2021 up until through the first half of 2022, so a 12-month period from about May to May, those people either have no equity, negative equity right now, or very little equity. And so those are the people you want to go after because they're going to have a pretty dang low interest rate, probably somewhere in the mid 3s, maybe to 4%, maybe mid 4s right now, depending on when they purchased. What makes it great about them having no equity is that it actually behooves them to sell to you, because after all the fees that us realtors have to get paid to do the transaction, they're actually maybe having to bring money to the table. And so if you're savvy, you can go out there and try and find a seller and do this deal yourself. Of course, I would love to help you. And so if we can put a deal together where it all makes sense for everybody, then I'd love to guide you through that whole process. But the reason I really suggest finding somebody with little to no equity is because if somebody does have equity and they want all of their money out of the property, let's say they owe $200,000 on an FHA loan at 3% interest, but the house is worth $400,000. They have a lot of equity in that property. So you could assume the $200,000, but the biggest issue is finding a bank right now that will lend you that additional $200,000 or anything in between as a second mortgage on that property at today's interest rate. So half of your mortgage would be at 3%, which would be awesome. The other half would be at today's interest rate, which would be not so awesome, but it's still a win right there. But many banks are not going to go into second position on that property and split the mortgage. So that's the other issue, is if you find a property with a lot of equity and a great interest rate, you're probably going to have to show up with the money to cover the difference there unless you can negotiate a deal. So that's why I say look for no equity properties with low interest rates. You're more likely to score in those situations. And if you think assumable loans are cool, I would assume that you appreciate this video and this channel. And so you should hit the subscribe, like, and notification bell so you don't miss a video. I'm posting them every single week on all things Spokane. So the last little, I'm going to throw in like a 2B here. I want to talk about rate buy downs because that's kind of a hot topic. So what a rate buy down is where you negotiate with the seller to do something called a 2-1 buy down or a 3-2-1 buy down. And so what these are is that the seller is going to contribute to purchasing one of these, which costs a pretty penny. It'll cost you probably somewhere in the ballpark of $10,000 to $15,000 to do one of these. But a 2-1 buy down is where the first year of your mortgage, your interest rate is 2% less than today's rate. So let's say today's rate is 7%. Your first year interest rate is going to be 5%. Then your second year interest rate is going to be 6%. That's the one portion of it. And then by the third year, you're going to be back at 7%, hoping and praying that interest rates go down so you can refinance. So of course, in this situation, you need to be very comfortable with the 7% interest rate because you have no idea when that is going to lower. Like it could be 3 years from now, it could be 8 years from now. We just have no idea. And so this is a temporary fix. And so it's my kind of last resort. I would rather us get either a house that is a good enough deal that it makes sense at 7% interest, or you are taking advantage of one of these other opportunities and getting a permanent solution for a lower interest rate. Third and last is jumping on some of the deals on new construction right now. So looking at some of these bigger builders that are pumping out new construction, which is great because we do need the inventory. A lot of them are sitting on product that they need to move. And so some of these bigger builders like Haydn Homes and D.R. Horton have been offering 5.5% interest rates pretty regularly. So if you reach out, I'm on all their lists. I'm in contact with many of the sales managers and I'm up to date on which builders are offering these incentives and when they're offering them. And so if you are looking at new construction, you are cool with Haydn Homes, D.R. Horton, or even Lennar and the communities that they offer, then you could definitely score a 5.5. I think I've even seen like 5.375 in some instances where they are, because if you use their lender, because these big builders have their own mortgage lender that works in-house. And so if they can keep it in-house, then they are able to offer you that incentive. Don't expect the most amazing customer service of all time, but it is definitely worth it in that situation to go through the struggle and do your best to deal with it so that you can get a ton of savings on your monthly payment in those situations. So there are the 3 ways to avoid a 7 to 8% interest rate in today's market. If you have any questions on these or one of them sounds interesting to you, please don't hesitate to reach out, call, text, email, or use the link down below in the description to schedule a time directly on my calendar at a time that's convenient for you. Thanks so much for watching. Like, subscribe, and I'll see you in the next video.